Hi guys, you are welcome to my YouTube channel. Today we'll be looking at how you can trade Euro USD, and we'll be looking at Euro USD pair from the higher time frame down to the smaller time frames, and then we'll try and see how we can generate signals and make some trades. But I'm not in the studio alone. I have Mr. Dre with me. Mr. Dre, say hi.
Hi everyone.
Okay, so he will be asking questions as I explain how to generate signals on Euro USD. We'll be asking questions, and I'll try as much as possible to respond to him. Okay, but for now, let me just do a quick analysis of Euro USD. I have Euro USD on the monthly time frame. And if I'm going to trade based on the monthly time frame, I'm going to first of all zoom out. I'll look at what is happening. I'm going to plot a trend line. This is my trend line tool to look at what has happened on the monthly time frame. This is my descending trend line. I hope you know how to do this. Yeah. So I'm also going to plot another descending trend line to get a channel. Now what I have on the screen is a channel, Euro USD channel, a descending channel. Over a period of time, this descent started. Can you see what is on the screen when the descent started?
Yeah.
It started in the year 2008. Okay, that's around July 2008. Okay, so we have a descent, and what actually happened is that price dropped, okay, from the top, from this very top. Just a minute. Euro USD price dropped from this very top down to this level, and then we have a rise. But if you look at this rise, Mr. Bray, it didn't get up to the top.
Yes.
So what we can see on the screen is that we have a top, this is a top, and we have a bottom. This is our bottom. Okay, all right.
Yeah.
Now we don't have a top, but this newly formed top, what can you say about this newly formed top? You can see that it's lower than this initial top. So when you have this kind of scenario, you call it a lower high. All right, this is a high, but this high is lower than this initial high. Okay, so you have a high, you have a low, you have a lower high, and then you now have a lower low. Now when you have the highs dropping, the height of the subsequent highs dropping, that is called a bearish trend or a bearish structure. All right, so if the next high cannot get up to the initial high, that means the trend is bearish, so price is going to go down. Now if you look at what happened here, we have this high. This very high is not as high as this particular high. So, but something happened around here. What I mean by something happened is that this low did not get as low as this point. Okay, so you will call this a high, a low. Now this will be what? Lower high, because it's not as low as this high. And you will call this lower low. Now when you have lower high, lower low, lower high, lower low, that's a bearish trend.
Yes.
But when you now have a high here, you have a high, this is a high, and this is a low. This is a low, right? Now this is a higher high. This is a higher high, in the sense that this high, this very high, is higher than this high.
Yeah.
So when you have higher high, higher low, that's a bullish trend. Okay, because if you look at this current low around here, it's quite higher than the initial low. We have two lows on this corner. This very low is higher than this low. So when you have higher high, higher low, higher high, higher low, higher high, higher low, that's a what? A bullish trend.
Bullish trend.
That means price is going to go up. But when you now have the reverse, which is lower high, lower low, lower high, then lower low, that's a bearish trend. So if you are able to identify these two on the chart, you can easily generate signals as in you can really easily forecast that price is going to go up or it's going to go down. Okay, now there's something we call structure. This is structure. Okay, this particular point, the top is called structure, this bottom is called structure, this top is called structure, this bottom is called structure. Okay, so when you have swing, like this top is called swing high or structure.
Okay,
this bottom is called swing low or structure. Now if you look at this particular top, it will be what? Swing high, right? Which is a structure.
yeah.
And this will be what? Swing low, which will be what? Structure. Now there's something we call break of structure. When you have this high here, which is structure, and you now see price breaking it around here, that's break of structure to the upside, or a bullish break of structure. Okay, but when you have this low here, all right, this low around here, which is our swing low, and you can see price breaking the low, it's called break of structure to the downside. So if you want to generate signal, you can generate signal when you have break of structure. It's either to the upside or to the downside. Now this is the monthly time frame. If you look at the monthly time frame for Euro USD, the structure is still bearish. Do you know why? Because it keeps breaking the lows. It's breaking the lows. Okay, there's another low around here. This is another low around here. Broke this low. Okay, can you identify any other low? This is another low. This is another low. Got broken at the end of the day by this. This is another low. This is another low around here. Got broken by this. Okay, that's break of structure to downside. When you start to see break of structure to the downside, know that you have a bearish trend on the screen, and you look for selling opportunities. What do I mean by look for selling opportunities? Try and look for when price will start turning downwards. There are ways you can know when price will start turning downwards. Start to see some candlestick patterns. Example of candlestick patterns that you see are the bearish engulfing patterns or bearish pin bars. Okay, and some other candlestick patterns. Okay, now for a typical bearish trend or bearish structure, the characteristics of such structure is you start to see lower high, lower low. Okay, you start to see lower high, lower low. Now this high is lower than this high, right? This high is lower than this high, right? Now this particular high, you can see it's lower than this. And look at this high too. Look at this high. This particular high is lower than this high. All right, and we also have another high around here, which is lower than the previous high. But now look at we're still on the monthly time frame. Euro USD is still trying to form a lower high. Okay, so will you rather buy or sell? You rather sell, right? Because the entire chart is telling us look for sell opportunities. So you will not buy for now. You will hold on to for when you start to see a break of structure. A break of structure can happen around here. when this low is broken, we call it bearish break of structure. You can see the break of structure of these lows around here. You can see it happening somewhere around here. The break of structure of these three lows around here, you can see it happening around here. You can sell at the place of break of structure on the screen, or you can sell at the place of lower high in a bearish trend. Do you get it? So this is the place of lower high. You can sell here. This place of lower high, you can sell here. If you sold here, you can see like how many months? 1, 2, 3, 4, 5, 6, 7 months stretch. Kept selling. You know how much profit you will have made. If you sold at this swing high, you can see over the months. If you sold here, over the months. If you sold here, over the months. If you sold there, over the month. So you can sell at the swing high, okay, or you can sell at the break of structure. If you sell here, when all the structures on this left side have been broken, if you sell here, you can see it came back to where it sold. It still came back to and started dropping. So if you look at the number of pips, you will have made some profit. But it's going to take years. Look at, it's going to take years. Okay, but this is the monthly time frame. Okay, the rate at which you trade, or the time it takes for your trades to close out on the monthly time frame, can go for days, or for months, or for years. All right, so there are traders that trade long term on the monthly time frame. They trade long term for years. They still have positions running. But if you have positions running for years as a retail trader, you'll be, accruing commissions or swaps, okay, which will come to a substantial amount on your account. Okay, you are going to be paying swap or commission to the broker. Okay, so that is that. So if you want to make a trade, or you want to place a trade, first of all, look at what is the structure on the screen. So the current structure for Euro USD on the monthly time frame is a bearish structure. So you look for where to sell. There are two places where you can place a sell trade. The swing highs, you can place a sell trade at the swing highs, right? Yeah. Or you can place a sell trade at the break of structure or breakouts. Okay. Okay. So that's that. That's for bearish trend. For bullish trend, you can place your trade at the swing lows, which is reverse of the bearish trend. Bullish trend, you place a trade at the swing lows. You have a swing low here, you have a swing low here, or a structure, a lower structure. You have another swing low here, you have another swing low here. You can place your trade at this swing low. Okay, now break of structure happen here. Okay, another break of structure happen here. Okay, it broke this point, okay, and went up for a couple of months, then reversed totally, and also broke this structure here. This is another structure, but this structure here is to the downside. Okay, this structure here is to the upside. Okay, more like a confusion. So it swept all the stop losses here, went down and swept all the stop losses and started going up on the monthly time frame. Okay, so that's the monthly time frame. Let's look at the weekly time frame. Okay, so on the weekly time frame, we want to trade Euro USD. What structure do you think we have on the weekly time frame? These candles are spanning over the weeks. What structure do you think we have for now on the weekly time frame? I'll say we have a bearish structure. Bearish structure, because we have a low here, we have a low here, and we have a high around here. Okay, then we have a lower low. Okay, but price is currently forming a lower high. Until price crosses above this point, then we have higher high. then you must start saying, oh, we are now having reversal and probably it's now turning to a bullish trend. But until you have the bullish trend formation, you will look for selling opportunities. Okay, now looking for selling opportunities on Euro USD weekly time frame. I'm zooming in. Okay, some traders will have sold around here when this pin bar showed up. Look at this pin bar here. When it showed up, some traders will have sold. Okay, zooming in, look at the trend. Okay, lower lows, lower high, lower low, lower high, lower low, lower high, lower low. Let me use lines to show it clearly. We have a high here and price, dipped to a lower low. Okay, and now gave us a lower high. Okay, and also dipped to give us a lower low here, then rose up to give us a lower high. Okay, and also dipped to give us a lower low. So if you are going to generate signals, I told you can sell at the swing high or you can sell at the break of structure. So if you are selling at the swing high, you'll be selling somewhere around here. Okay, you can sell here and you ride the structure, you ride the trend down. Okay, and now you start to see it rising. You can sell again when it starts to form a turning around here. Okay, and then you ride the trend down, or you can sell when it starts to form a turning around here, and then you ride it down, or you sell when it starts to form a turning, you ride it down, sell when it starts to form, you ride it down. So you kept having a bearish trend development running around here. So you can sell at the swing high or you can sell at the break of structure. Okay, like you have a structure here, this particular low here, that's a structure. Now you got tested here or got broken here, went up and got clearly broken around here. So you can place a sell trade here. Okay, and then ride down. Okay, you have another break happening around there. This is another structure. Where you have your swing low is your structure. So you can sell at this break of structure here. Sell it, write it down. You have another structure developed. Okay, this is another structure developed. You can sell at the break here, write it down. You have another one developed. You can sell at the break here, write it down. You have another one developed. Okay, look at it, got tested here as if it's going to break. It went up and now finally broke it and went down. So but the bearish structure, this bearish structure that you have here, got broken around here where you have this high. Look at this high. You have a structure to the upside here. It got broken here. That's a break of structure to the upper side. So if you place a buy stop here or you place a buy trade here, you can buy. But the overall trend is a bearish trend. So in as much as you are buying, you take caution. Take caution when buying. So that's that. All right, we are still looking at how you can trade a Euro USD on the weekly time frame. So you can sell Euro USD at the swing highs. All right, you can sell at the break of structure. So those are the two places or points where you can sell Euro USD. You can also buy Euro USD at the swing lows. Okay, like this is swing low. This is swing low around here. This is swing low around here. You can buy Euro USD at the swing low and then ride. Okay, or you can sell a swing high. Look at these swing highs. Okay, those points, those high points, they are your swing highs. You can sell at those points, or you can buy at break of structure. The structure to the upside is about to be broken around here. If you see, you are about to have a break of structure to the upside. This is the structure, and it's about to be broken to the upside. So you can buy at that point, but the overall direction is downwards.
Yes.
Okay, it's bearish. Now let's look at the another thing when selling, okay, is you can place sell trades when you see some formations like head and shoulder. This is the left shoulder. We are looking at Euro USD on the weekly time frame. This is the left shoulder, this is the head, and this is the right shoulder. This is the right shoulder. Okay, you can sell at the neckline. Okay, this is the neckline. Okay, just like a normal human being, we have our head, we have our two shoulders, and we have our neck. Okay, so same thing happens on the charts. You have head and shoulder with neckline. If you can just hunt or search for head and shoulder formation, it happens more often. You can search for on all the time frames. You can search for head and shoulder formations on the screen. You can trade that pattern, head and formation pattern. So you wait for the head to form. You can see the shoulder form, the shoulder to form, head formation, shoulder to form. Then allow the neckline to be broken. Okay, if you look at it, got broken around here, went up, got broken, now got retested. As in it came back to that neckline, then price started to drop. Now when price dropped, you can see a structure here. You can see a structure around here. Okay, let me highlight the structure. You can see the structure, okay, on the weekly time frame, and you can see the break of structure. So you can place your sell trade at that point. Okay, you can sell at this shoulder when you are familiar with the head and shoulder pattern. Okay, you can wait for the shoulder to form, the right shoulder to form, and sell at that point, placing your stop loss at the top of the head and then ride. So whenever you trade head and shoulder, your take profit will usually, when you measure the height of the head, okay, and placing that height to the neckline, your take profit will usually be as high as the head to the neck. The height of the head to the neck for head and shoulder pattern trading. Okay, so that's that for the weekly time frame. Let's look at the daily time frame. Okay, looking at the daily time frame, what can you see about, what kind of structure can you see on the daily time frame as far as the chart is concerned? The bullish structure. Now you can see a triple bottom here, but this is the first bottom. Okay, this is the second bottom. Okay, and this is the third bottom. We can't call this head and shoulder. Do you know why? Because they are almost of equal height. Okay, for head and shoulder, inverted head and shoulder, the middle drop will be much more deeper than every other drop. Okay, so we can call this rising bottoms. Okay, or tree drive pattern. Okay, the first one, the second one, the third one, and it has also has a neckline. This is the neckline. Okay, at the break of the neckline, look at the break of structure. Okay, and look at the retests. You can trade retests. You can trade break of structure. You can trade the swing. You can either buy here, which is the swing low, or you can buy at the break of structure, or you can wait for it to retest that neckline. Okay, and then buy. Okay, so those are ways you can generate your signal. If you are buying at this swing low, all right, your stop loss can be below the low of the initial low, because you can see what is what can you say about these three lows? One is higher than the other. Yeah. Okay, this middle one is higher than this. So we have higher low. This is a high. This is a higher low. This is a higher high, higher low. So that's the development of a bullish structure. So when you start to see that, I mentioned it in the previous video, that for you to identify the trend, once you see higher high, higher low, higher high, higher low. Once you see that, you know it's a bullish trend. So what can you say about a bearish trend? What do you see?
Lower low.
Lower low, lower high, lower low, lower. So once you see that, you know that's a bearish trend. But there was a particular part of the initial chart on the last video where we see sweep of stop losses. Okay, where price swept the stop loss at the top, also swept the stop loss at the bottom, and eventually started going up. So if the trend is bullish, it may, like this trend is bullish, price might come down to sweep the stop losses there and still continue in the original trend. That's forex for you. But it will have shown you that the trend is bullish at the start. But at some point, you have liquidity sweep or liquidity grab. It will eventually go in the direction of the trend. So that's that for the daily time frame. The structure on the daily time frame is a bullish structure, but the overall structure on the weekly time frame and the monthly time frame is bearish. Okay, so but when we have bullish structure or bullish trend and we have bearish structure or bearish trend, we also have range or equilibrium. Okay, we have range or equilibrium. Now, example of range, this is a range. Okay, until we have a range breakout. Okay, I'm talking about this particular point. We have a range here. Okay, where buyers bought up to this point, sellers sold back to this point, buyers bought up to this point, sellers sold back, buyers bought until the sellers, more sellers now came in. Possibly there was a news, and on a daily time frame they drove price to break the range first, or the structure first, then push price down. Okay, now look at what's happening on Euro USD on the daily time frame. What can you see? It's a range. So apart from you seeing a bullish structure or a bearish structure, you can also see a range. Okay, this is our range bottom, this is our range top, and we expect price to continue to range until we have a breakout. Okay, now when you have a breakout, you now enter your trade. But we have traders that trade range traders. Range traders will place their sell orders here and sell, you know, when price goes down to make some profit, and they will place their buy orders here and buy when price touches it to make profits. Okay, that's for range traders. Okay, but to generate signals on a range, you buy at the low. Okay, you buy at the low and you sell at the top. Okay, at the high. Okay, that's how to generate signal when you are in a range. So on the daily time frame, Euro USD is currently ranging. On the weekly time frame, is bearish. On the monthly, is bearish in overall direction. Okay, so that's that for the daily time frame. So if you are going to trade Euro USD today, you can see this doji, and you can see that price has broken the eye of the doji. The doji is yesterday's candle. You are familiar with candlesticks. Now this candle is yesterday's candle and this is today's candle. What you can notice, what you can see, that yesterday's high or Friday's high has been broken. We have a new high, higher high, higher low, higher high, higher low. This was the low for yesterday, for Friday rather. This was the low for Friday's candle. This was the low, the low on the daily chart. Okay, this was the low, and this is the low for today. Excuse me. This was Friday's low. Trying to draw a shape around here. This was Friday's low. Okay, this was Friday's low, and this is today's low. So we have a low. Today's low is higher than Friday's low. Okay, so we have higher low. Now you're not having higher high. Okay, because Friday's high has been broken, break of structure to the top side. this high, this is the high point of Friday's candlestick. It has been broken because this particular today's candle is higher than, okay, so that's that. So it's bullish, okay, but the overall structure is bullish. Okay, now let's look at the 4-hour time frame. Let's see if we can generate signals on the 4-hour time frame. This 4-hour time frame for Euro USD. Now what can you say about this particular chart? You have a low. You know, we discussed that Friday's low was a low, and then we have higher low. So we are expecting price to get to this high. Okay, so if you are going to trade, you trade the break of this high to buy to the high side. Now if you are going to buy to the high side, you are going to, you know, we are in a range on the daily time frame, so you target the top of the range. Okay, look at these tweezer bottom candlesticks on the 4-hour. This shows a equal force of the bears or the sellers being matched by that of the buyers. The buyers are like, no, we are not pushing it down. With an equal force, they drove price back to where it started from. So you can see the buyers are more active. Okay, just looking at this chart, this is the lowest part of the chart. Okay, and this is the highest part of this chart. Okay, and you can see that price is rovering above the middle of the chart. So more like price is gonna go up. Okay, bullish. So you look for buying opportunities. All right, but if you see the chart and it looks bullish, there's a tendency for price to first of all sweep all the stop losses below the low here, this low, and then continue in its initial direction. Okay, do you understand? But the initial, the current direction is bullish. Okay, that's 4-hour time frame. And let's look at Euro USD 1-hour time frame. Let's see what can we see on the screen. What can you see on the screen? You can see, I can see something like inverted head and shoulder. Okay, this is my left shoulder. I'm seeing this as my left shoulder. Look at, it's my left shoulder, and I'm seeing this as the head. I'm seeing this as the head. This is the head, inverted head, and I'm seeing this as the right shoulder. So if I'm going to trade Euro USD, I wait for the neckline to be broken. Okay, this is more like the neckline. So remember, once it's broken, you enter your trade. Your take profit could be the length of the of the neckline to the head. Okay, neckline to the head. The length could help you to get your take profit. Trying to move this. Okay, so you might be taking your profits at the top. Okay, because you have something like head and shoulder. If you want to place stop loss, you can place your stop loss below the low here. You know, of course, if price on the 1-hour time frame breaks, if price breaks this low, you have a break of structure to the downside. But at times it could be liquidity sweep or liquidity grab, where price just break this structure and then go back. You have a fake out. Instead of breakout, you have fake out. So you have to be conscious of that. That's how to generate signals on the 1-hour time frame. Looking at the 30 minutes time frame, what can you say about the 30 minutes time frame? It's still bullish to me, because you have, looking at the candlesticks, you have, looking at the population of the red and the green candles, you have more green on the screen, more buyers on the screen. So the sellers are more or less inactive. Although you have like an equilibrium around here, you have like an equilibrium around here. What do I mean by equilibrium? I mean range, equal buyers and equal sellers. Okay, like they're trying to push price up, push it down, push it up, push it down. The sellers will come at the top, push it down. Buyers come at the bottom, push it up. So when you have a breakout of this range, okay, that's when you can now trade. Whether you trade to the up side or trade to the downside. But if you want to trade the range, you can place your buy limits below the range, at the lower part of the range, your buy limits, or you can place your sell limits at the top of the range, and you must have your stop loss in case you have a range breakout. Of course, there will always be a range breakout. Price, Euro USD price will not range for a long time. You have a range breakout at some points. Okay, so that's that for the 30 minutes time frame. Finally, let's look at how you can trade Euro USD on the 15 minutes time frame. Then we'll call it a day. Okay, this is the 15 minutes time frame. What can you see? Price is still ranging. Okay, so price still ranging. You wait for a breakout, but you can always draw your trend line. All right, look at your trend line. This is your trend line. Okay, okay, for ascending trend lines going up. This is also your trend line for descending trend line. For the range to continue, price might test this descending and then drops until there possibly maybe there will now be a news release. Then you now have a breakout or a break of structure. Okay, but for now it's a range. Okay, but on the daily time frame it's bullish. On the weekly time frame it's bearish, and on the monthly time frame it's bearish. The structure is bearish. So Mr. Dre, do you have any question so far? So we'll meet at some other time. Any question?
The question is, what do you call this line? That long line in a candlestick.
That's called a wick. A wick. Like this is a pin bar. The entire candlestick is a pin bar.
What does it refer?
Now this wick, if you look at, let me zoom in. Okay, if you look at this candle, you have the candle shape. This is the candle body. This is the candle body. Okay, this is your candle body, right? Now this wick, this candle body means by the price opened. It means the price opened here. Price opened here, and the buyer, the sellers, first of all came in and drove price downwards. Sellers came in and drove price downwards. Then the buyer stepped in and drove price back to where it started and further up above where it started. So the price now closed. It went up even higher and then came back a little where the sellers showed up, and the price closed at this point. So, and this shows that the bulls are in the market. Shows that the bulls are in the market, and you can see what happened. Price went up. So that's that for this video session. Hi guys, this is a continuation of how to trade Euro USD. Apart from looking at the structure, be it bullish structure or bearish structure of Euro USD on the higher time frames down to the lower time frames, apart from looking at the break of structure or trying to spot where you have the swing highs and swing lows, there's also a part where you need to check for the order blocks or the supports and resistance zones, where you have price testing a zone and then reversing or retracing. Now, to find order blocks on the chart, I have a monthly time frame, Euro USD monthly time frame chart on the screen. To check for order block, first of all, let's look at what is order block. Order block is the last candlestick of an opposing new trend. The last candlestick of the opposing new trend. Okay, either at the top or at the bottom of that particular trend. Okay, now to know the order block here, okay, the last candlestick, this is the last bullish candlestick before the development of a bearish trend. So that last candlestick will also sometimes create the breakout, the break of structure. Okay, I have this bullish candle on the monthly time frame. This bullish candle is my order block or my resistance zone. Okay, so it is a particular zone where I expect price to come back to in future. okay, because it's a resistance zone. Now this zone always come, or this block also always come up before the breakout or the break of structure. You know, there's a break of structure around here. This is structure, right? And the structure was broken somewhere around here. Okay, so you have the order block before the break of structure. Okay, is an opposing candle that appears before the development of a new trend. Okay, now this can be taken as another order block. Okay, this can be taken as order block, this bullish candle. Okay, because before, after this small tiny candle, we have price breaking this structure. Okay, now, but another important part of order block is order block will always lead to, sometimes lead, or always or sometimes leads to imbalance. What do I mean by imbalance? A perfect candle formation, or a set of candle formation, a set of formed candles will always have their wick testing each other. Like this is a bearish candle, it has this wick, okay, and it leads to this bullish candle. All right, now this following candle, the wick is also testing the previous. So this is a perfect progression of candles. But the order block will come before the imperfect progression of candle. Look at this wick, small wick of the bullish candle is not touching the other wick of the other bullish candle. So you have an imbalance. An imbalance. This is a portion of imbalance after the order block created. So this makes this a formidable or a critical order block or a resistance area. Are you with me? So look at the wick here didn't touch the wick here. So this gives you a formidable order block. But you don't have imbalance after this order block here. So this order block is more important than this particular order block. Okay. Now you have this also another order block, but there is no imbalance. Okay. This also another order block. Okay, but do we have imbalance? No. Let's see whether there's an imbalance. Oh, there's no imbalance because the candles touched. Okay, and that's why you can see that this particular candle, bullish candle, didn't really respect this order block. Okay, but I bet it with you, by the time this price goes up, it's going to respect this order block here. Okay, that's for the monthly time frame. So you can easily highlight your order block, okay, on the higher time frames, okay, and then drill down to the lower time frames to work on the same order block. Let's drill down to weekly time frame. Okay, can work on this order block. Expect price to come to this order block to test this order block and then drop. So at this point you can enter your signal, your trade. You can place a sell limit here. So when price touched it, you expect price to go down, you will be in profit, and your stop loss will be above the order block. Okay, so that's another way you can place your sell trade. Of course, if you go back to the monthly time frame, okay, this order block to the upside, you go back to the monthly time frame. Let's look at for order block to the downside. Okay, you have an order block around here, the last candle at the bottom, opposing candle at the bottom. Okay, this red candle, this bearish candle, is opposing before you have the development of a new trend. So this is going to be your order block. Do we have imbalance? Can we see whether we have imbalance? Yeah. Let's see. Imbalance means the wick here is not touching this wick. Let me remove the shape. So there is an imbalance. There's an imbalance. This wick, okay, is not touching the one on the other side here. So this is a much more bigger imbalance, okay, or inefficiency of the candle progression. Okay, so you can call this an order block or a support that you expect price to come to in future. We are still on the monthly time frame, so you expect this to be our order block. So if you are going to place your buy limit order, you can place your buy limit order somewhere around here. Okay, once price drops to this order block, you expect price to go up. Where will be your stop loss? Your stop loss will be somewhere around here below the order block. Okay, so that's that on the monthly time frame. So if you drill down to the weekly time frame, you expect price to, you know, come down to form order block on the weekly time frame in this order block in order block. So immediately price forms order block here, you can place your buy trade. You can open the buy position, okay, and then write the newly formed trend, okay, and make some profit. So that's order block on the monthly time frame. Let's see if you can find order block on the weekly time frame. Let's see if you can find order block. Can this be taken as order block? Is there inefficiency? Yes. Let's see. They didn't touch, so a little inefficiency, so it's an order block. So you expect price to come to this area, okay. This is the candle. The order block will cover the opposing candle. This is the opposing candle before the newly formed trend, and it's also led to a breakout. Okay, this can be taken as order block. Is there any inefficiency? Let's see. There's no inefficiency as they test each other. This week here also touched this week here, so that can be taken as order block. Okay, but it can be taken because you have price also coming to that level. Look at what I saw. Look at this week price tested. Let's zoom into the daily time frame. Let's zoom into the daily time frame. You can see price tested the order block and dipped. You will have made some profits. This, like, how many days it tested it? 1, 2, 3, 4. For 4 days it went away from that particular order block, so it will have picked your sell limit here, and your stop loss will have been above the order block. Okay, now still on the daily time frame, back to the weekly time frame. Let's look at this very order block. Excuse me, just a minute. Back to the weekly time frame. I want to delete some. Just a minute. Okay, now still on the weekly time frame, this initial order block. Okay, we have inefficiency. Okay, for this order block we have inefficiency. So drilling to the daily time frame, you can see price coming to the order block around here, okay, and it dropped. Okay, dropped for some days or some weeks, okay, like a couple of weeks. It dropped as far as this point. So price tested the order block around here, still within the order block, okay, and dropped to this point. Okay, so if you place your sell limit within this order block, your stop loss will have been above it. Okay, your stop loss will have been above it. So trading order blocks, first of all, mark up your order block on the higher time frame, then go to the lower time frame and expect order block within order block for you to enter your trade. Or you can just place your sell limit or your buy limit, so that when price tests that particular pending order and triggers it, it can activate your trade. Of course, you put your risk management, which is your stop loss, at the bottom of the lower order block or at the top of the upper order block. So that's that for order block. So that's that for the daily time frame. Let's see if we can find order blocks on this particular chart. Can this be taken as our order block? Yes, because there is inefficiency. This can be taken as our order block. Okay, and look at what happened. This bullish candle is the last candle before the newly formed bearish trend here, and there is inefficiency. This week is not touching this week here. Okay, so look at price tested it. If you drill to the 4-hour time frame, going to the 4-hour time frame, price tested it here, and what happened? Price drop. So you can, if you want to find signals on Euro USD, you can just trade other blocks. Okay, you find your signals. You can place your sell limits, you can place your buy limits. If you place your sell limits around here, you'll have made some profits because the price, you know, entered into the other block, tested it and dropped. That made some profits. Also tested it here, dropped. Tested it until we now have a break off structure. Okay, so that's that for the daily time frame. This other block is a very good order block. Let's look for another order block on the lower side. Can this be another block? It's a wide one. Can we take it as an order block? Can we take this as an order block? Okay, you have to look at, is it creating breakout? Did this create breakout? Did this create breakout? Okay, did this create breakout? So those are the things you look out for. Is there an inefficiency just after the formation of the other block? So those are the things you look out for. Can this be taken as order block? This bearish candle, yes, because there is inefficiency, tiny little inefficiency, and you can see price came to the block and, you know, went up. Okay, so that's that for the daily time frame. Let's look at the 1 hour time, the 4-hour time frame. Can we find other blocks on the 4-hour time frame? Can we take this as other block? Look at price tested the zone. Can we take this candle as another block? Price tested the candle here and then rise, so it can be taken as another block. Can we take this last bullish candle as another block? Look at what happened. Price went into it and what happened? Drop. So those are ways you can find your trade entries. So that's that for the 4-hour time frame. Let's look at the 1 hour time frame and try to spot other blocks. Can we take this as another block?
Yes.
Because price, there's inefficiency, one. Okay, and price entered into it and dropped. Okay, can we take this as another block? Yes, because there's inefficiency. So we expect price to still find a way of coming here before going up. Okay, so you can set your buy limits at the bottom, sell limits at the top. Can we drill to 30 minutes whether we can find other blocks? Can we take this as another block?
Yes,
because it has been tested already. And look at the way price went. You'll have made some profits. Okay, can we find other blocks here? Can we take this long one as other block? Okay, okay, did it lead to breakouts? Does it have inefficiency? Did it create fresh inefficiency just after the formation? Those are things you look out for on your other blocks. Let's look at the 15 minutes time frame. Can we find any other block? Okay, this long one is very long, kept coming in. This, does this lead to inefficiency? Yes. Can it be taken as other block? As price come to it? Yes. These are other block and price has come to it and is rising. So those are ways you can find your entries. Okay. That's that. Do you have any question? No question. So that's that for this video. See you in the next video. Hi guys, so we are going to look at how you can find signals on the Euro USD chart. I have the Euro USD chart monthly time frame on the screen. So another way you can find signals is by checking for engulfing patterns. What do I mean by engulfing patterns? Engulfing pattern is when you have at the top of the chart, like you have a top here, you have the formation of a candlestick covering totally the entire length of the previous candlestick. Okay, like at the top you have the formation of a bearish candle like this red candle covering the total length of the previous bullish candle at the top. So that's meaning that this red candle engulfed, totally cover the bullish candle at the top. So we call it bearish engulfing pattern, candlestick pattern. And when you have bearish engulfing candlestick pattern like this particular candlestick, that means you have a reversal and the development of a fresh trend. And see what happened. The formation of this longer candle, the wick and the body covers the wick and the body of the initial bullish candle. It's called bearish engulfing pattern and see what happened. A trend was developed. Okay, so another bearish engulfing pattern is this particular bullish candle you have here. The red candle after it, the bearish candle after it, totally covers the previous bullish candle. And can see what happened. The development of fresh trend. Okay, just like we have bearish engulfing candle, we also have bullish engulfing candle. This is an example of a bullish engulfing candle. This body covers the total body of this particular red candle at the bottom of the chart. So bullish engulfing candle will appear at the bottom, bearish engulfing candle will appear at the top. Okay, so that's for the monthly time frame, Euro USD monthly time frame. We can call this a bearish engulfing. Okay, we can call this a bearish engulfing. Let's look up, is there any other engulfing pattern on the weekly time frame? Can we find another engulfing pattern on the weekly time? Okay, let's go to the daily time frame. This is a bullish engulfing pattern. You can see this red candle, you can see this longer, quite longer green candle covering the totality of the red candle. You can see what happened, the development of a fresh trend. Okay, so that's that for the daily time frame. Can we still find another engulfing? This is an engulfing candlestick pattern. Okay, this small red candle is being covered by this green candle. So that's bullish engulfing pattern. Let's look at the 4-hour time frame if we can find examples of engulfing candlesticks. Okay, looking at the left side, no engulfing here. Okay, this is an engulfing candlestick pattern. You can see this bullish, but this is not appearing at the bottom. Okay, but it's engulfing. It's appearing at the middle, not at the bottom, but it's engulfing the entire candles on the left. Okay, up to this point, especially this immediate red candle, and can see what happened. Price went up. Okay, so is there any other engulfing pattern that we can find on the Euro USD 4-hour chart? Any other engulfing? Is there any other engulfing? This is engulfing. This engulfing, the candlestick, the wick and everything covers, or is even longer than the previous one. You can see what happened. Price went down. This engulfing on the 4-hour time frame, you can see. So if you want to trade Euro USD, apart from looking at the trend lines, looking at the other blocks, breakout, break of structure, trading the swing highs, swing lows, you can just target the engulfing patterns, and then that will give you a fresh direction to where price go to. In as much as this is engulfing, look at this is engulfing. This green candle is longer than this red candle. Look at another engulfing here. This red candle is longer and bigger than this green candle. And you can see what happened, price went up. So you can look for engulfing on the higher time frame, from 4-hour time frame to daily time frame to weekly time frame to monthly time frame. That will tell you that price is going to trend to an extent, and you can ride the trend from there. Do you have any question as regards engulfing patterns? All right, so that's that for engulfing patterns. Engulfing patterns are best used at the top or the bottom of the trend. The top or the bottom. Engulfing patterns also helps you to identify the swing highs and the swing lows. You are looking for swing high, you are in a bearish trend, and you are looking for swing high. You know, swing high in the bearish trend is at the lower high. Yeah. Okay, so when you see an engulfing pattern, or you see a pin bar, okay, or you see other patterns, candlestick patterns that can tell you that there will be a retracement or reversal, that's when you enter into your swing high or swing low. Okay, so at the top you have the bearish engulfing pattern forming. At the bottom you have the bullish engulfing pattern forming. So engulfing patterns are the patterns that helps you to actually identify the point of retracement or reversal. What do I mean by retracement? Retracement, when price goes up from here up to here and it didn't break structure from where it started from. It got to maybe midway or towards almost the end before going up. That's a retracement. Okay. But when price goes up here, from here, it goes up from here up, and then now break the structure and goes much more down, okay, further down, that's called reversal. Looking at from here, I'm not talking about from here to here and back to here is retracement, but from here to this point and back to this point is reversal. So reversals breaks structure, okay. Retracement does not break structure. So engulfing patterns happens at the point of retracement, at the starting of a retracement or a reversal. So you could have engulfing patterns like this is a stretch, and you have a retracement. An engulfing pattern can show up here and retrace price, not completely totally the trend, but to an extent. Or engulfing pattern can appear here and reverse everything down and lead to even a break of structure at the tail end of the initial trend. So that's that as far as per engulfing patterns. When you want to trade engulfing patterns, like this is an engulfing pattern, you place your stop loss at the base of the engulfing pattern. Okay, you can enter your trade at the close of the engulfing bar, the bar that engulfs. You can enter your trade, you can place your buy trade here at the close of this engulfing bar, or you can trade retest. By the time you go to the lower time frame, you can trade retest of that engulfing pattern. Okay, you can trade a retest of it. So that's that as regards how to trade engulfing pattern. For a bullish engulfing pattern, you place a stop loss at the low of the engulfing bar. For a bearish engulfing pattern like this, a bearish engulfing, you place your stop loss at the top of the engulfing bar. Okay, look at, if you want to trade this bearish engulfing and you place your stop loss here, price will trigger your buy and your sell trade and then trip your top stop loss. But if you have placed your top stop loss at the top of the engulfing bar, price will go up or not trigger your stop loss, and your trade will be good, and you can easily take profit somewhere around here. So in the next video, we'll talk about how you can use Fibonacci retracement tools to know your take profit or your stop loss area. See you in the next video. Hi guys, you are welcome to my YouTube channel. Today we'll be looking at how you can use Fibonacci retracement tools to know your trade entry or your take profit or your stop loss area. So Fibonacci retracement tool, this is the tab or the icon for the Fibonacci retracement tool. Once you click on it, you can plot your Fibonacci retracement levels, okay, on the screen. Okay, like I have the level to be the Fibonacci retracement to be red in color. I can change the color of the levels. Okay, it's currently yellow. I can change the color to, let's say, black. Okay, so that's that for my Fibonacci retracement. Now, to plot Fibonacci retracement, you first of all need a trend to have formed on the left side of the chart. If you have a trend that has formed and you have your swing high, your swing low, all you need to do is to find the retracement. You have the top, like in a newly formed bearish trend that is retracing. Okay, you place your 100% Fibonacci level at the top of the bearish trend. You place a 0% Fibonacci level at the bottom of the bearish trend. These are bearish trend. Okay, remember, for a bearish trend on the left side, and you want to find where to place your trade entry and where to place your take profit and where to place your stop loss. You, in a bearish trend, you place your 100%, let the 100% Fibonacci retracement level be at the top or the swing high of the bearish trend, newly formed bearish trend, and let the 0 Fibonacci retracement level be at the bottom or the swing low of that particular bearish trend. Okay, now with that being done, you can now place your entry at around midpoint between the 23.6% Fibonacci level and the 38.2% Fibonacci level. Around the 30% Fibonacci level, you can always place your entry here. Okay, and then your take profit will be either the 50% Fibonacci level or 61/8% Fibonacci level. Of course, your stop loss could be at the 5% or at the 0% Fibonacci level. So that's how you can easily enter trade using Fibonacci tools. Okay, so if you have a bearish trend, this bearish trend, and you place your 100% Fibonacci tool when plotting the Fibonacci levels, place your 100% Fibonacci tool at the top of the bearish trend, and you place your 0% Fibonacci tool at the bottom. For a bullish trend, it's going to be the reverse. Reverse will be the case. You place your 100% or your 100% Fibonacci level at the bottom. Okay, let's look at this bullish trend. You place the 100% at the bottom. You place the 0% Fibonacci 2 point at the top. Then you place your trade entry, the midpoint of the 23.6%. Okay, and the 38.2%. That will be your trade entry. Your stop loss could be at the 0 or a little bit above the 0, or at most 5%. Okay, or at the 0, it's best above the 0. Okay, your stop loss, your trade, your take TP1, your take profit 1 will be at 50%. TP2 will be at 61/8%. Okay, so that's how you can easily use the Fibonacci retracement tool to enter trade, take profit, and place stop loss. Now, there's another significant function of Fibonacci retracement tool. Fibonacci retracement tool, like for a bearish trend now, if price retrace up to the 23.6 and breaks structure. What do I mean by break structure? It retraced up to this point and went back in the direction of the trend. Okay, if it goes below this 0, then that's a break of structure. Do you agree with me? Yeah. Now, if you have a break of structure in that sense, that means this trend, this bearish trend, is a strong trend. Okay, very strong, and still going to go down as long as this length can go down, as long as this entire trend length. But if it gets to the 38.2% and breaks structure, okay, it's also a strong trend, but the trend might not be as strong as the 23.6. Okay, if it gets to the 50% Fibonacci level and also breaks structure, it's also a strong trend. Okay, but might not be as strong as the 38 and the 23. Okay, now if it now gets to the 61.8, there's also going to be a trend, but it's going to be a weaker trend. It might not even get to the 0 level. It could just get to 23 before rising further. Okay, but it can as well get to the 0 level, but that might be the last point to get to before going back up. Or it might break structure but not really go down that much because it's going to be a weak trend. So that's another way you can use your Fibonacci retracement. You can set on your Fibonacci tool, you can set more levels at the top by going right clicking on the Fibonacci tool, going to the Fibonacci levels, click add. Okay, let's add 74.6 Fibonacci level, for instance. So the left side, the level side will be 0.746, and the description will be 74.6. So if I click OK, you're going to see the 74.6 Fibonacci level appear somewhere around here. So if I click add, you can see the 74.6 Fibonacci level has appeared. So if price rises up to that point, of course, that trend is going to be much more weaker than the lower levels. Okay, it might just drop to 38 or 23 before going up. Okay, so you can also add another level to your Fibonacci retracement level. You can add 88.5% level. Click add 0.885. Okay, these are significant levels on the Fibonacci retracement tool. Okay, 0.5. Okay, it's 8.5. Okay, so that's that. So price could retrace up to this point. It's still a retracement. Do you agree with me?
Yeah.
So but don't expect it to go much. It could just get 50% before rising up further. Okay, but if price retraces from 0 to 100 and goes above 100, that's going to be called break off structure to the upside. Okay, now at that point you must start looking at Fibonacci extension. This is retracement. As far as it's under 100, is retracement. But as soon as it breaks structure to the upside, it turns to Fibonacci extension. Okay, we have the 138.2% extension. We have the 161.8 extension. Those are another level of using Fibonacci tools. So to use your trade entry for Fibonacci extension, if price breaks above the 100%, you can enter your trade. Okay, 138.2. Let me add this 138.2. If I'm going to click add 1.3, that will be 138.2. Okay, percent. Okay, that's going to appear now. 138.2 could be your take profit 1. If you place your trade entry here, you buy here at the break of structure, you can target 138.2 as your TP1. You can target 161.8 as your TP2. Your stop loss could be 38.2. It could be 50% Fibonacci level. So that's that on how to use the Fibonacci tool. Do you have any question?
I'm fine.
All right. So see you in the next video.